Hello traders. The title of the video is how to sell and hold like a professional trader, part 2. I believe that you have watched part 1 and that you have understood everything that we have discussed in part 1. This is very important so you may understand what we are talking about here. In the first tutorial, we were talking about buy and hold like a professional trader. In that tutorial, we want the market S&P 500 to be bearish, the stock that we want to sell and hold also to be bearish, and we want to check the fundamental of that financial instrument. Also, we want it to be bearish. So, fundamentally speaking, the stock that you want to sell and hold is bearish. All right. Technically speaking, is the stock is also bearish. Not only that, the market itself is bearish. Now we have a good reason to sell and hold. So watch the first part so you may understand how to sell and hold. In this tutorial, we're going to look at a different scenario that is a little bit tricky, which you're going to come across more often, all right? More often. In this scenario, what's going to happen, all right? So the S&P 500 may be bearish, so meaning that it has stopped. So I'm not going to explain that again because I will refer traders to the first video. Otherwise, the video will be long. So the S&P 500 has stopped or is bearish, all right? Okay. Technically speaking, this I'm choosing my word. Technically speaking, so you see a double top or whatever, okay? Try break below a support level and find a resistance. So technically speaking, all right, we have a bearish setup for that financial instrument that you want to sell and hold. All right, technically. But fundamentally speaking, the stock is not bearish. So you perform Google Asset test for that stock. You do your due diligence talking about fundamental analysis. The balance sheet is strong. They are making money. All right, but the market is becoming bearish. Okay, and the stock, technically speaking, is bearish, but fundamentally is not bearish. Can you sell and hold it? How can you sell and hold in that case? So I have here on my chart Apple stock, a very bullish stock with a strong fundamental. But you can see on this chart that there are times when professional traders did manage to sell a bullish stock just because of fundamental reason, okay, or because of the market. So market and technical reason, okay, have allowed professional to sell Apple stock. See how they showed it down big time. Look at that. That's a sharp move down for Apple stock to go down in 1 month like this is really, really bearish. Does it mean that fundamentally speaking it was bearish? No. It was just because it has reached the top of the third Elliott wave. All right. And people were playing the fourth Elliott wave. The first thing I want to say to you so you don't forget, all right, so I do not forget to tell you also is that when you want to sell in that scenario, all right, you want to sell, okay, for short term. So you can buy and hold for 3 months, which means 1 quarter. You can sell and hold for half of the year, all right? But it will be tricky for you to sell and hold for the whole year because fundamentally speaking, the stock is okay, robust, all right? They have a strong balance sheet, they are making money, and long-term investors don't see any reason why crazy bearish traders should come and sell their stock. Most importantly, if the company is paying dividend, so watch out for financial instruments that are paying dividends. So what I will say to you, if the S&P 500 is bearish and the stock that you want to sell is only technically bearish, but fundamentally speaking, is not bearish, all right? Fundamentally speaking, is not bearish, all right? You need to be very, very careful. That's all. Very, very careful. All right. Very, very careful. All right. So you want to personally, you may sell for what Personally, what I'll do, you are selling for 1 month, okay? That monthly candlestick bar, so I'll go each month. So if you look at, I need to move this line now. See here, see here. So look at it. Look at this candlestick bar here. So you see here. So it dropped down 1 month like this. That was successful sell. You see the following candlestick bar. It opened here. It didn't open at the low of this one. So there was a bit of rally here on the daily chart. It went up. So you may sell it gradually. In fact, those stock you may adopt the mindset of a bearish swing trader because there's no fundamental reason to sell, okay, and hold it, all right? So remember what I said to you in the first tutorial, the natural nature of the market is bullish. So when we are selling and hold, we are fighting the market. Right? Most people want to buy and hold, and they will be buying even during the bearish time. All right, but now here we are. The market is becoming bearish, or the market is going to pull back in the second wave, in the fourth wave, or during the corrective phase. All right. And technically speaking, that stock is also bearish. So the market sometimes becoming bearish, okay? All right. Now the stock is technically bearish, but fundamentally it's not bearish. What do? You want to sell it, you want to sell and hold, but you want to sell it gently. So you can sell for hold it for short term or medium term. That's it. Don't push it too far. Because as the price going down, there are long-term investors that are checking the book value. They are checking the balance sheet. They are checking their cash flow, especially companies like Apple Store that are making money like crazy. All right, it's difficult to share those stocks because long-term investor will be people like Warren Buffett will be buying you and kick you out of your trade because they don't care whether it's coming down like this. They are buying it. They are buying it. Though it's going down, they know it's going to go down for maybe 3 or 4 months, but they keep buying it. They keep buying it because they are looking for 5 years investment. Even here, some investors will keep buying Apple stock because they think that okay, there are more. It's a bullish stock looking at the long term, they don't care. They have a deep pocket, they will be buying. Another thing I need to say to you in this tutorial, talking about this particular scenario, do not sell stock that paying dividend. I mean, try to stay away from them because they are tricky. If the company, some company, what they will do, so most of the company they acquire, their director hates when people are selling their stock. One of those stock is Tesla. You remember when okay, Elon Musk was okay talking about it on Twitter, all kind of thing, because he hate that people were selling, all right, his stock, all right. So directors don't like it. So sometimes you see that the market may be bearish, okay, market is bearish. They know that people want to sell, okay, and probably so they know also that maybe their stock, technically speaking, is bearish. But they are not happy that people come and sell their stock, okay? They don't like it. The director, they hold millions of their own shares, so they don't like it. So because they know that people will try to sell their stock for short term or medium term, all right? Sometimes they play with the market. So for instance, if they were paying 50 cents dividend, all right, if they see that the stock is going to go down, at the end of the quarter, they may say, all right, we're going to pay uh, $1 a share dividend. It's just a strategy to kick the bearish trader out of their trade. Or they may come up with some excellent good news. It's just to they try to play with the psychology of the bearish traders. Sometimes by saying things that they are saying, by doing things that they are doing, or by paying more dividend when they know that the stock is due to go down a bit, or because they don't like it, the people that are selling their stock, that can create a fear. Those fear will force some of the bearish traders to come out. So suppose you were here, you were selling, okay, and they come out that they're going to increase their dividend. Well, you may decide to grab your profit and go. So how a bearish trader will grab his profit and go. He will buy back, isn't it? So a bearish trader will become a bullish trader when he or she is closing a bearish position. So some of the people start being afraid, they will start coming out. So the price may go up a bit because of those reactions, because of those decisions that are made that can also influence, okay, uh, the price action. So if the market is bearish, okay, any stock is only technically bearish but fundamentally solid, and one is selling it, be very gentle. Adopt either short-term view or medium-term view. Be very agile. Take profit consistently. I would say adopt a mindset of a swing trader. So you sell it as a swing trader. You move down like here. You move your stop loss. You move your stop loss, control it, or grab your profit and go. And then you look for another opportunity to sell it again. So you are selling and coming out gently, gently as it goes along. All right. Sometime, okay. You see, sometimes you see, this is 2008. Look, Apple stock, look what he did. That's what he did here. This is 2008 financial crisis. Is that bearish enough for you? No, very bearish because it's going down. 1 month it went down, another month it went down, and then it went down for 2 months, and then after that, bye bye. Okay, you see now. So you want to be aware of the financial instrument that you are trading, fundamentally speaking. Sometimes, though, I am saying what I'm saying to you, which is very wise thing to do, very wise thing to do. But sometimes you'll be surprised. A stock, this is something that a lot of investors do not understand. A lot of fundamental traders do not understand. Sometimes, because of the technical reason, all right, sometimes the technical reasons will prevail. So I'll give you one example now. The market is bearish, okay? The market is bearish. The stock is only technically bearish. For instance, we are at the end of the fifth wave, all right? Or the market, the stock has stopped, okay? Came out of the bearish channel, okay? Now he went to retest the channel, okay? Right below retest, it's coming down. Okay? Now, most hedge funds or most professional traders are technical traders. They see it like that, they want to sell, okay, for technical reason. So if there's more demand to sell it, the stock may have a strong balance sheet, all right, maybe making money, but if the bearish pressure is strong, it may go down more. So you may say to me, George, oh, I come out too quickly. After 1 month, you say that I should be careful. Look, it went down for 6 months. Sometimes you will see that. So don't be surprised. Sometimes a stock can have a strong balance sheet, but due to technical reason, it may go down for maybe 6 months or more. Don't be surprised. But it will be wise to be prudent, as I said to you earlier, to adopt a short term and medium term view, especially when they are paying dividend or they are trying to make decisions that can squeeze the bearish traders. All right. So another example will be Apple stock, for instance. Suppose it's a strong company. Suppose it exhibits a double top, all right, which is a bearish chart pattern. Here it is. This is a technical reason. All right. Now, okay, it came down here like this, right below the nut. Now it formed a lower high right there, and the common center line is broken. Technically speaking, they will sell it. They will sell it, okay? Or another example for idiot way traders is the one that we see very often. Bullish stock going up, going up, going up, okay, like this. And then it reaches the fifth idiot wave, all right? And then it come down 1, 2, 3. Idiot way traders spot it. And then it went up again, 1, 2, 3, to retest the 138.2% Fibonacci extension of the last segment of the fifth wave. Now, Fibonacci traders and idiot way traders, technically speaking, they want to sell this stock. Now, it's tricky. The market is bearish, good. A correction is going to begin, all right. But fundamentally speaking, that stock is very strong. It's paying dividend. But the last segment of that pattern, which is the C manual way of the flat correction, is going to be subdivided into five. Sometimes it can rush down. Another example, which means it may be fundamentally strong, but due to technical traders, it may go down more than normal. Okay, that's what I'm saying. Another example can be just a zigzag pattern. this is again either way trader. A trend has finished. They spot it that a trend has finished. Right, pop up of the channel. Now they see a sharp correction, and then they see 1, 2, 3 up like this. They're going to sell it again. They're going to sell it. They're going to sell it if they come and say, because they know the pattern and they are trading the pattern. So all I'm saying to you is this: if you want to sell and hold, any market is bearish. S&P 500 is bearish, all right? Has top, as I say in the first tutorial. Technically speaking, the stock that you want to sell and hold is also technically speaking bearish, but fundamentally, you will be crazy to sell it. Be gentle, but sometimes it may work beautifully. So you want to be very protective, securing your gain, taking a short-term or medium-term view, going one step at a time. It's like having 1 foot in and 1 foot out. When you see that, you see how this one, you see what we call bullish engulfment. Now, that's the fourth idiom. And you look at that. Look at how the bullish trade, they push it. One currency bar, erase 50% of this currency bar, and then blah, 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 blah. So you, if you hang around too much, if you are stubborn bearish trader, this is what's happened very often when the stock has a strong fundamental, and though S&P 500 and the major indices were also in the fourth wave, like Apple stock here, and this is what usually happens. All right, this is it. So all in all, another thing that we can add to this is that personally speaking, all right, personally speaking, if the market is bearish, the stock also is bearish, and the fundamentals are solid, the best time to try to sell and hold them for short term to medium term is when they're about to start a correction. So for those of you who do not understand what we meant by correction, is that there was a trend. Okay, there was a trend for some time. You see, this is a trend. It's not finished yet. That trend started since 2001. That trend is still in place. 2001, can you believe that? 90 years. That trend is not finished yet. You see the pitchfork too still here. Okay, and one day that trend will end. So if that trend has ended and a correction is starting, those are the time to look to sell and hold a financial instrument with strong fundamental. Again, it's 1 foot in and 1 foot out. Okay, you keep your left hand side eye on one. Okay, you are 50% bullish and 50% okay bearish, because you know that the stock, there are people waiting to buy it. But sometimes, due to technical reason alone, all right, can be a pattern, can be a price structure, the hedge fund and the professional trader will spot it, and they're not going to be afraid to sell and hold it for a while. All right, but look at this. This is only, look at Apple stock, look at that, 3 months. So you can go even into the past or history of the chart. See, all right, if I want to sell this, I see 3 months. You see here, 3 months. See, you see 4 months here. You see, 1 month. So what's the decision? This is it. So you can go around. Okay, like this one here. This is, see, this is coming down more. This is Goldman Sachs. You see here. So this you see here. This is Goldman Sachs, strong company here. So you see, this is the structure here. Price went now 1, 2, 3, 4, 5. Now it is X wave by the way. And you see 1, 2. They're going to sell it down. They want to sell it down. They see, in fact, here 1, 2. Now they sell it here. You see how this session came down. These are technical reasons causing the price to go down when a company has a strong fundamental. But do not bet on it. And when you are doing it, the reason why I'm dwelling on it, and I want you not to get carried away when you are dealing with this scenario. You know which scenario it is, and you are handling it carefully. See this, can you see back here? Came down, look at this one. Yeah, you see how it went back almost 70% of that very currency bar. It's a pure look down. That's it, finished. Blah, 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 blah. You see here? This is what we are talking about. This is what we are talking about. This, you see how they run back up very fast. See, this is what we are talking about. Okay. So this will conclude our second part of this tutorial. If you have any question, suggestion, be sure to put in the comment section. And in due course, I will be recording another tutorial to answer your specific question. All right. If the video has been useful to you, please let us know by giving us a thumbs up. Say, George, Well, I'm not very sure. First, I can't understand your beautiful Texas accent. Second, you are speaking like a frog. Third, okay, you are the only one that can understand what you were talking about. Okay, George. Well, in fact, I never liked your video. I'm not going to like this one. George, the video is too long. Okay, mark it down. All right. Do something that will make you feel good. Mark it down, please. Okay. However, if you say that, George, it's an amazing tutorial. Feel free to share with your friend on the social media. Subscribe to our YouTube channel. Our YouTube channel is George Trio. That's my name, George Trio. Be sure to click on the notification bell so anytime you record a new video, all right, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders talking about how to sell and hold like a professional trader, part 2. In a third tutorial, I'll be analyzing, I'll be talking about another scenario, okay, how one can sell and hold in that particular scenario, what to look for, how to handle it like a pro without being squeezed out, because a lot of bearish traders are squeezed out of their bearish trade because they are ignoring the fact that the natural progression of the market is bullish. So when we are selling and hold, one should understand what kind of scenario we are in and how to handle it so we do not get cooked like okay, a fried chicken. All right. It's lunchtime in London. All right, so time to eat something also. See you in the third tutorial. Until the next time, enjoy yourself and be very happy. Happy trading to you all.